Hi, I'm Jimmy. In this video, we're looking at Visa, ticker symbol V. So we're going to look quickly at Visa's business, then we're going to look at some of their financials, and then we're going to finally come up with the fair value for Visa's stock using discounted free cash flow. Now, this video is part of our series where we're analyzing all 30 companies in the Dow Jones Industrial Average. Once we complete that analysis, we're going to try to identify the 3 best value stocks at that time, the best growth stocks, and the best dividend stocks. Okay, now let's jump into Visa's business. So this is their segments broken out by 2020 revenue. And this is they actually have one reportable segment, which is called payment services. But within payment services, they break it into 4 different groups. Their largest group we could see is data processing fees. And that's exactly what it sounds like. It's the fees they collect for processing the different transactions that they have. Then they have their service fees. That's about 35% of total revenue. Then they have their international transaction fees. We're going to come back to this one in a minute. This gets interesting in a second. And then they have their other fees. They define these fees or this revenue as value-added services, also licensing fees or technology fees. Basically, when they can't fit them into one of the other baskets sort of neatly, they plop them here. Now, that's only about 5% of total revenue, so it's not something we have to spend too much time with. That being said, we're going to switch over to a chart of the history for each of the different segments. So we can see when we look at their data processing revenue, going back to 2005, broadly speaking, the trend has been higher. They've done a nice job of growing this business. And then when we add their service fees to this, well, again, we can see the trend has been consistently higher. This includes the financial crisis. This includes the 2020 drop. But now when we add the international transaction fees, this is where it gets interesting. Well, look at what happened in 2020. 2020 was the first dip we saw in revenue, which is actually quite logical considering what happened in 2020, especially from an international travel perspective. But in 2021, when we expand the area we're looking at a bit, once again, growth has resumed. Okay, and then we'll add other revenue to this. And once again, other revenue has been a small piece and has consistently been a small piece of total revenue. So when we get rid of some of these segments and we make it all total revenue, well, again, outside of 2020, we've had a fairly steady uptick. But one of the interesting parts about Visa's revenue is that if you were to look at their revenue on many financial websites, well, you wouldn't see these numbers. You would actually see net revenue. Net revenue is what happens when you deduct what they call customer incentives. Customer incentives we added in the red here. So you take that away from gross revenue. Gross revenue, you take away customer incentives, you end up with net revenue. So on most financial websites, you're going to see the $24 billion in revenue in 2021, not the $32 billion or so that we're showing here. Okay, so now let's try to look forward a bit. Now, one of the major headwinds that the US economy and a lot of the world economy is facing right now is higher inflation. And I think it's important to consider with a lot of companies that we analyze, it's important to consider how are they going to get affected either in an economic pullback, which is very likely to happen as the Federal Reserve increases interest rates, and or higher inflation, which hasn't happened in a while, but it is something to at least consider. So when we consider the impact of inflation, well, the good part about a company like Visa or even a MasterCard or American Express, because they're collecting a fee, because they're a transaction-based business, they're collecting a fee. So if I go to a restaurant and I spend $50 or $100 or however much it is, Visa gets their percentage no matter what. So with higher inflation, if it no longer costs me $100, but now it costs me $110, well, they're getting the same percentage of a higher number. So overall, their revenue would likely increase because of higher inflation. But higher inflation is also likely to slow down the economy a bit and cause less transactions. So their revenue is going to get dragged down a bit. So between those two, we should call it about a wash. And this brings us to what would happen in a recessionary environment. Right now, there's a decent chance that a recession comes out of everything that's happening in the world. What happens to a company like Visa? Well, for that, I think it makes sense to look at their revenue once again. But this time, I've actually hidden the years of this. So where on here is the financial crisis? If we had no other information except for Visa's revenue chart without any numbers attached to it, where on this entire chart is the financial crisis? If we think about it, the financial crisis is one of the worst recessions in US history. outside of the Great Depression, since the Great Depression, there hasn't been another one that it was as bad as that one from a numbers perspective. The stock market pulled back nearly 50%, which was not only a huge pullback for the stock market, but also a big slowdown for the broader economy. Yet on Visa's revenue chart, you can hardly notice it. Now, of course, when we add back the years back here, well, we can see that the financial crisis happened in 2008, 2009. Those were the two of the biggest years, but Visa continued to grow. Now, yes, we do see a dip in revenue from 2019 into 2020, and we saw before that happened because they had a reduction in international transaction fees, but still, outside of that very isolated event, broadly speaking, this industry has continued to climb higher, and I suspect this industry will continue to climb as more and more transactions go digital and cash is used less and less. That being said, let's jump into the fair value of Visa stock using discounted free cash flow. So this is actually a website that we're building. It should be up and running in the next week or two. And we can see that when we punch in Visa up here, well, we get a fair value of about $186 per share. And of course, the goal here is to buy the stock below that, at least below that. I like to add a margin of safety to that. And we can see I'm using a required rate of return of 9%. We've recently increased that from 7.5%. If you'd like to see, we did a video recently on why we made that increase. So if you're curious, I'll leave a link to that video in the description below. But one of the real interesting parts for me with Visa is this warning we get right here. So this warning warns us that this free cash flow to revenue number is on the high end. Now, when we look at companies like Apple or Microsoft, which typically are companies that have good margins, well, their free cash flow to revenue is usually in the mid 30% range. 35% would be a decent free cash flow to revenue. And that basically tells us how much of revenue is converted into free cash flow. And we could see over here that Visa's, their 5-year average is 52%. So one of the things we're going to want to do when we get this type of warning is we're going to want to look and say, is that number reasonable? Now, in the case of Visa, when we look at their history, well, their history implies that is perfectly reasonable. They've been doing this for a long time. In fact, analysts believe that over the next couple of years, they're going to improve this a bit. So overall, I think that our 52% number seems very reasonable, and there's no reason to believe that there's going to be huge pricing pressure on Visa, at least over the next couple of years. Now, Visa doesn't have a huge dividend, and when we look at their cash and their debt, we can see that they don't have a ton of debt compared to how much cash they have. In fact, it lowers their price because what we do is we take away their cash, we take away their debt, we add back their cash. Well, we can see it only affects their stock by about $2 per share. So it's not too bad. So for me, I like Visa. I'm keeping Visa in my bullpen, and I'd like to add Visa to my personal portfolio. I recently added some Citigroup to my portfolio to get some exposure to the financial sector. This is a pretty good one to add. I think that adds diversity to my portfolio. But again, I need it to drop below a 186 plus a bit of margin of safety. So once it gets there, I'll probably be adding this one to my investment portfolio. But I'm happy to sit and wait for this one to get to the right level because I don't want to jump the gun early, sort of violate my own rules. But if you'd like to sign up to get access to this website, like I said, over the next week or two, this should be up and running. And we're going to be doing global stocks. There's going to be a whole bunch of, it's like 8,000 or 9,000 companies worldwide and all the major exchanges around the world. So it'll work in a whole bunch of different countries. So if you'd like to sign up, I will leave a link right here, a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.